Welcome back to Chairman's Briefing, in partnership this week with Kenorland Minerals. I'm Rachel Lee. Let's get into it. Gold tagged yet another all-time high. Spot gold is currently trading at $2,583 in North American trading on September 19th and is on track for its strongest annual performance since 2020. The once unthinkable $3,000 per ounce is now within reach as central banks loosen their grip and America braces for an election showdown. According to Akash Doshi, head of North American commodities at Citi Research, gold could reach $3,000 per ounce by mid-2025 and $2,600 by the end of 2024, driven by U.S. interest rate cuts, strong demand from exchange-traded funds, and over-the-counter physical demand. And if incoming data points to growth risks and weakness in the labor market, it will raise a chance of another 50 basis point rate cut in either November or December, which would increase the tailwind for gold and pull forward the timing for the $3,000 mark. Investment banks and analysts have turned increasingly bullish on gold, with Goldman Sachs showing the highest confidence in near-term upside in gold. Now, the precious metal remains its preferred hedge against geopolitical and financial risks. Australia's Macquarie raised its gold price forecast and is now looking for a quarter average cyclical peak in the first quarter of 2025 at $2,600 per ounce, with potential for a spike towards $3,000. After a nearly 10% pullback from its mid-August highs, the GDX snapped back and is consolidating recent gains in a tight trading range. In the short to medium term, we could see gold testing multi-year highs, especially since equities haven't kept pace with gold's rapid climb. Now, investors should prepare for potentially extreme market volatility. Though there have been a handful of notable moves in the junior sector in recent sessions, like Probe Gold beating expectations with a 10 million plus ounce resource at Novador, and American Creek getting taken out at a decent premium for its 20% stake in Treaty Creek, most of the companies in this high-risk, high-reward arena continue to suck wind. However, that may be about to change. For instance, the Goldfields acquisition of Osisko Mining at a 50% premium is a clear indication of what a resource-hungry producer is willing to pay for high-quality ounces. The bottom line is major miners need to continually expand their project pipeline. And in this pursuit, resource-rich junior miners play a crucial role, serving as a vital link in the industry's supply chain. Gold discoveries worldwide are becoming increasingly rare and smaller, signaling a potential supply crunch. S&P Global's latest analysis reveals only 5 major gold discoveries since 2020, adding just 17 million ounces to their database. While the total number of discoveries has grown slightly since last year, most were actually found decades ago and only recently met the criteria for notable finds. The average size of recent discoveries has shrunk to 3.5 million ounces, down from 5.5 million ounces in the previous decade. Now, this trend supports the view that focusing on known deposits limits the chances of major new finds. S&P Global expects gold supply to peak in 2026 at 110 million ounces, driven by increased production in Australia, Canada, and the U.S., before declining to 103 million ounces by 2028. Back in March 2022, in a deal valued at $1.4 billion, Kinross bought the Great Bear project in the Red Lake district of Northern Ontario without the benefit of an MRE. It simply liked what it saw in the assay-related news flow cycle and snapped up the deposit, depriving giants like Barrick of the opportunity. Many believe Barrick should have seized on the opportunity to acquire the asset while it had the chance, especially now that Great Bear is shaping up to be a Tier 1 asset. For your information, Tier 1 is defined by a reserve potential that delivers a minimum 10-year mine life, annual production of at least 500 ounces of gold, and total cash costs in the lower half of the industry cost curve. Since acquiring the project, Kinross has extensively drilled the Great Bear, identifying 2.7 million ounces of gold in the measured and indicated category and 3.9 million ounces in the inferred category across 3 zones. Their PEA outlines a 12-year mine life, producing over 500,000 ounces annually for the first 8 years. And while we're talking about the Red Lake District, Kenorland Minerals announced a major gold anomaly discovery at the Papaanga target area from its 100% owned South Uchi project. Initial findings show promising bedrock mineralization and plans for diamond drilling are underway. The company also created an internal 2% royalty on South Uchi, setting the stage for a potential spin-off of its royalty assets into a separate division. B2Gold's Goose Mine in Nunavut will see a 3-month production delay and a capex increase, $610 million to $1.13 billion. Now, despite these challenges, the company expects the first gold pour in Q2 of 2025, with an anticipated annual production of 310,000 ounces for the first 5 years. The company also provided an update on its progress on the Fekola complex in Mali, where they've come to terms with the new regime, which holds a 20% stake in the project. The agreement with the Mali government ensures the expedited approval for Fekola regional and underground operations. Production from Fekola Regional is expected to start in early 2025, potentially adding up to 100,000 ounces of gold annually. Let's talk about Alamos Gold's recent power move. Aside from cranking up their production forecast for this year by 13%, the kicker is that they're looking at 20% a boost in production for 2025 to 2026. This growth spurt is coming from 2 places. Their Mulatos mine in Mexico is stepping up its game, and Magino, which they snagged from Argonaut Gold last July, is expected to chip in up to 50,000 ounces in the second half of 2024 alone. The Magino acquisition gave Alamos a 4th long-life producing asset in addition to its 2 mines in Ontario, called Young-Davidson and Island, and of course Mulatos in Mexico. It also has the Lynn Lake Development Project in Manitoba, which received federal environmental approval last year, as well as others in Turkey and Oregon. CEO John McCluskey is eyeing a future where Alamos could be producing around 900,000 ounces a year. BHP, the world's largest miner, is highlighting the significant impact of AI on global copper demand. BHP's CFO, Vandita Pant, notes that data centers are expected to account for 6 to 7% of copper demand by 2050, up from less than 1% currently. Overall, BHP anticipates global copper demand to rise 72% to 52.5 million tons annually by 2050. The long-predicted shortage has triggered a race to secure copper assets, as evidenced by BHP's recent acquisitions and attempted takeovers. Ivanhoe Mines is stepping into Zambia, another top 10 copper-producing nation. Now, the company recently signed a memorandum of understanding with the government and has applied for exploration licenses in the country, with decisions expected by year-end. The company plans to follow the same model that led to the discovery of the Kamoa-Kakula copper complex in the DRC. Ivanhoe also holds exploration rights in Angola, with an initial $10 million budget allocated for the region. Only weeks after the discovery of the second largest diamond ever recovered, Lucara Diamond has dug up a 1,094 carat diamond from its Carat mine in Botswana. This is the 6th diamond weighing more than 1,000 carats to be recovered at the mine. Carat remains one of the highest margin diamond mines in the world, producing an average of 300,000 high-value carats each year. Paladin Energy's proposed acquisition of Fission Uranium is being blocked by Chinese investor CGN Mining Company, which holds a 11.26% stake in Fission. The deal, aimed at creating the 3rd largest publicly traded uranium producer, failed to secure the required 2/3 shareholder approval by the initial deadline. A postponed vote saw 67.9% support, but the matter is now before the Supreme Court of British Columbia for a final ruling. The metals company and Japan's Pacific Metals have successfully processed 2,000 tons of deep-sea nodules into 500 tons of calcine at a Japanese facility. Now, this material will be further refined into alloys for battery production. While the companies see this as a breakthrough in commercial-scale processing of ocean resources, they face environmental opposition and regulatory challenges. And that's a wrap for this segment. If you want these insights in your inbox every Thursday morning, subscribe at the link below. Of course, you can also catch me here on YouTube to watch instead. Turn on your bell notifications, and of course, thanks for being a part of Chairman's. We'll see you next week.